Welcome to a world beyond the traditional investment landscape of stocks and bonds. In the realm of financial planning, it's not uncommon to hear the phrase, "Don't put all your eggs in one basket." This age-old wisdom speaks to the concept of diversification, a cornerstone of robust investment strategies. And while stocks and bonds have long been the mainstays of many portfolios, they are far from the only options available to investors. Enter the world of alternative investments. This term encompasses a broad range of assets that fall outside the conventional categories of publicly traded stocks, bonds, and cash. From real estate and commodities to private equity, venture capital, and even collectibles and art, alternative investments offer a myriad of opportunities to diversify your portfolio and potentially enhance your returns. But what makes these alternatives so attractive? Well, firstly, they're not directly correlated with traditional markets. This means that when stocks and bonds are going through a rough patch, your alternative investments might still be performing well, helping to balance out any losses. Secondly, alternative investments often provide a hedge against inflation. Assets like real estate, commodities, and precious metals can retain or even increase their value during inflationary periods, providing a protective shield for your portfolio. Lastly, with higher risk comes the potential for higher returns. While it's true that alternative investments can be riskier than traditional ones, they also have the potential to deliver outsized gains. However, it's important to note that alternative investments are not a one-size-fits-all solution. Each asset class has its own set of risks and rewards, and what works for one investor might not work for another. Therefore, it's crucial to do your research, understand your risk tolerance, and consider your financial goals before diving in. As we navigate through this vast and varied landscape of alternative investments, we'll delve into the specifics of each asset class, their potential benefits, and the risks involved. As we embark on this journey, remember that knowledge is the first step towards making informed decisions. First stop on our alternative investment journey, the world of real estate. Just like a well-written novel, real estate has a captivating allure. It's tangible, it's solid, and it can provide a steady income stream. But like any good story, it has its fair share of plot twists, risks, and rewards. So let's delve into the potential returns from investing in real estate and discuss the associated risks. Now imagine owning a property. You've got tenants who pay you rent every month. This rental income is a significant part of the return on investment in real estate. It's like having a steady paycheck, but instead of clocking in hours at an office, your property is doing the work for you. However, rental income isn't the only way to profit from real estate. There's also property appreciation. Over time, the value of your property may increase due to a variety of factors, such as improvements to the property itself or positive changes in the surrounding area. This appreciation can lead to a significant return on investment when you decide to sell the property. But let's not forget, every silver lining has a cloud. Real estate isn't just about cashing rent checks and watching your property value soar. There are risks and costs that require careful consideration. First, there's market volatility. The real estate market can be as unpredictable as a roller coaster ride. Property values can skyrocket one year and plummet the next. This volatility can impact both your rental income and the overall value of your property. Next, consider the costs of maintenance and repairs. Owning property isn't a set-it-and-forget-it kind of investment. It requires constant care and attention. Broken pipes, leaky roofs, faulty wiring, these are all potential problems that come with the territory. And let's not even get started on the costs of major renovations or upgrades. Last but not least, there's the issue of illiquidity. Unlike stocks or bonds, you can't just click a button and sell a property. It can take months, sometimes even years, to sell a piece of real estate. This lack of liquidity can be a major drawback, especially if you need to access your investment quickly. Despite these risks, many investors find real estate to be a rewarding investment. With careful analysis of potential rental income, appreciation rates, and maintenance costs, you can make informed decisions that can lead to lucrative returns. Remember, real estate isn't just about buying a property and hoping for the best. It's about understanding the market, assessing the risks, and managing your property effectively. It's about considering the potential for rental income, the likelihood of appreciation, and the costs of maintenance and repairs. In the end, real estate investing is like a game of chess. It requires strategy, patience, and a keen understanding of the board. You need to anticipate the moves, Consider the risks and make smart decisions. And just like chess, it's not always about the quick win. Sometimes it's about playing the long game, making consistent moves that lead to a strong position and, ultimately, victory. While real estate offers lucrative returns, it also requires careful analysis and constant management. Next, we delve into the high-risk, high-reward world of private equity and venture capital. Imagine a world where businesses thrive on innovation, where startups blossom into multinational corporations, and where investors can potentially reap significant returns. This is the world of private equity and venture capital. Unlike traditional investments in publicly traded companies, private equity and venture capital involve investing directly in private companies or startups. Private equity typically involves buying and restructuring companies that are not publicly traded or taking public companies private. The goal? To sell them at a profit. It's a bit like flipping houses, but on a much larger scale. Venture capital, on the other hand, is all about funding startups or young companies with significant growth potential. These are often in the technology or biotech sectors, where innovation can lead to exponential growth. Now, you might be wondering, why would anyone want to invest in a startup? Aren't they risky? Well, yes, they are. Most startups fail within the first few years, but the ones that succeed, they can yield astronomical returns. Think about early investors in companies like Uber or Airbnb. They took a risk, but it paid off handsomely. This high-risk, high-reward nature is what makes private equity and venture capital such enticing investment options. But they're not for everyone. Here's why. First, there's the issue of illiquidity. Unlike stocks, which you can sell at any time, investments in private companies are not easily sold or transferred. You often have to wait for a liquidity event, such as the sale of the company or an initial public offering. This can take years, and there's no guarantee it will happen at all. Second, the failure rate of startups is high. Many promising companies never make it off the ground. Even with a diverse portfolio, you're likely to experience losses. That's just the nature of the game. Third, investing in private equity and venture capital often requires a substantial initial investment. We're talking hundreds of thousands, sometimes millions of dollars. This puts it out of reach for many individual investors. However, this doesn't mean you should write off private equity and venture capital entirely. There are ways to get involved without breaking the bank. For instance, some crowdfunding platforms allow individuals to invest in startups with as little as a few $1,000s. Moreover, there are private equity funds and venture capital funds that pool resources from multiple investors. This can lower the individual investment requirement and spread the risk across a more diverse portfolio of companies. So yes, investing in private equity and venture capital can be risky. It's not for the faint of heart or the thin of wallet. But for those willing to take the risk and patient enough to wait for a potential payoff, the rewards can be life-changing. Remember, as with any investment, it's important to do your research and understand what you're getting into. Don't invest more than you can afford to lose, and consider seeking advice from a financial advisor or investment professional. And most importantly, don't be afraid to dream big. After all, every successful company started as a dream, and who knows, the next Uber or Airbnb could be just around the corner waiting for an investor like you. Private equity and venture capital investing can be risky, but the potential rewards can be life-changing. Now, let's uncover the glittering prospects of commodities and precious metals. In the world of investing, diversification is the buzzword. And commodities, with their shiny allure, provide an excellent avenue for achieving that goal. The commodities market includes everything from agricultural products like wheat, corn and soybeans, to energy resources like oil and natural gas, and of course the precious metals gold, silver and platinum. Each of these commodities plays a unique role in the global economy, and thus in an investor's portfolio. Let's start with the benefits of investing in commodities. Think of commodities as the building blocks of the world economy. They're fundamental to industries and sectors across the globe, from fashion and technology to energy and agriculture. This means that their prices are often driven by supply and demand dynamics, which can be influenced by various factors like weather patterns, geopolitical tensions, and economic indicators. Now let's talk about the glimmering stars of the commodities market. Precious metals. Gold, silver and platinum are the most commonly invested precious metals. and they each have their unique attributes. Gold, often referred to as the crisis commodity, tends to shine brightest during times of economic uncertainty. It's seen as a store of value, a safe haven asset that investors flock to when other markets are turbulent. Silver, on the other hand, is not just a precious metal but also an industrial metal. It's used in a variety of applications from electronics to medicine, which means its demand can be driven by both investment and industrial needs. And then there's platinum, a rare and valuable metal, often used in the automotive and jewelry industries. But as with any investment, there are risks associated with commodities and precious metals. One of the biggest risks is market volatility. Commodity prices can swing wildly due to changes in supply and demand. For example, an unexpected frost can wipe out a crop, leading to a surge in prices, while a breakthrough in renewable energy technology could cause oil prices to plummet. Storage costs are another consideration. While you can buy physical gold or silver, storing it safely can be expensive. And if you're investing in commodities like oil or wheat, well, you're probably not going to want a barrel of crude or a silo of grain in your backyard. Then there's the impact of geopolitical events. Commodities are often produced in regions that are politically unstable or prone to natural disasters. Any disruption in these regions can impact the global supply of a commodity, and thus, its price. Despite these risks, commodities and precious metals offer a unique advantage. They can act as a hedge against inflation and economic downturns. When traditional investments like stocks and bonds are performing poorly, commodities often shine. This is because commodities retain intrinsic value, which can be particularly valuable during times of economic instability. So should you consider adding commodities and precious metals to your investment portfolio? As with any investment decision, it depends on your individual circumstances, risk tolerance, and investment goals. But one thing's for certain, commodities offer a world of opportunity for those willing to venture beyond the traditional realms of stocks and bonds. Commodities offer a hedge against inflation and economic downturns, but they are not without their challenges. Let's now venture into the digital realm of cryptocurrency. As we delve into this relatively new asset class, it's essential to understand that cryptocurrencies are digital or virtual currencies that use cryptography for security, operating independently of a central bank. Foremost among these is Bitcoin, the first blockchain-based cryptocurrency, which remains the most valuable and popular today. Since its inception in 2009, Bitcoin has seen an astronomical rise, attracting investors with its potential for high returns. Ethereum, another heavyweight in the crypto world, has also made waves with its smart contract functionality. But what makes these digital assets so attractive to investors? One of the key selling points of cryptocurrencies like Bitcoin and Ethereum is the potential for high returns. Indeed, in the past decade, early investors in these digital assets have seen their investments multiply many times over. For instance, if you had invested a mere $100 in Bitcoin in 2009, that investment would be worth millions today. However, the road to riches in the crypto world is not as straightforward as it might seem. Cryptocurrencies are known for their extreme volatility. Prices can skyrocket one day and plummet the next. This volatility can be a double-edged sword, offering the potential for high returns, but also posing significant risks. Regulatory uncertainties also pose challenges to investors. Cryptocurrencies operate in a legal gray area in many jurisdictions, and the regulatory landscape is continually changing. Some countries have embraced cryptocurrencies, while others have banned them outright. These regulatory uncertainties can impact the value of cryptocurrencies and pose risks to investors. Cybersecurity threats are also a significant concern in the crypto world. Since cryptocurrencies are digital assets, they are vulnerable to hacking. There have been several high-profile hacks of cryptocurrency exchanges in recent years, leading to significant losses for investors. But despite these risks, the potential for high returns continues to attract investors to cryptocurrencies. Many see them as the future of finance, a digital gold of sorts, and there's no denying their growing influence. Major corporations like Tesla and PayPal have begun accepting Bitcoin as payment, and a growing number of Wall Street institutions are exploring ways to incorporate cryptocurrencies into their operations. So, should you invest in cryptocurrencies? As with any investment, it's important to do your research and understand the risks involved. Cryptocurrencies can offer high returns, but they are also highly volatile and come with unique risks. As such, they may not be suitable for all investors. Cryptocurrency is a new frontier in finance, promising high returns but also fraught with risks. As we continue to explore alternative investment opportunities, it's clear that the world of investing is as diverse as it is exciting. Whether it's real estate, private equity, commodities, or cryptocurrencies, each asset class offers its own unique set of opportunities and challenges. Now we step into the fascinating world of art and collectibles. Imagine owning an original Van Gogh, a vintage bottle of Chateau Lafite Rothschild, or a classic Aston Martin DB5. Not only do you get to appreciate the beauty and history of these items, but they could also provide robust financial returns. Yes, we're talking about the potential of art and collectibles as an investment avenue. Art and collectibles cover a broad spectrum, from paintings to sculptures, fine wines, classic cars, rare stamps, antique furniture, and more. Each of these categories has its unique charm, and they all share the potential for high returns. Some collectors have seen their investments double, triple, or even quadruple in value over time. But it's not just about the money. The joy of owning a piece of history, a work of art, or a rare item is a reward in itself. However, as with all investments, there are risks and challenges involved. One of the main risks is illiquidity. Unlike stocks or bonds that you can sell at a moment's notice, it could take months or even years to find a buyer for a piece of art or a vintage car. And if you're in a rush to sell, you might have to settle for less than your item's true worth. Another challenge is the high entry costs. Acquiring a masterpiece or a classic car requires significant upfront investment. It's not uncommon for pieces of art to sell for millions and even tens of millions at auctions. And that's not even considering the ongoing costs of insurance, storage, and maintenance. Then there's the need for expert knowledge. The art and collectibles market is complex and nuanced. It's not just about knowing what's valuable now, but also predicting what will be valuable in the future. You need to understand the history, the artist, the provenance, and the rarity of each item. You also need to be able to spot fakes and forgeries, which are unfortunately all too common in this field. Despite these challenges, the potential rewards can be substantial. An investment in art or collectibles is not just about the financial returns, it's about the joy of owning something unique, the thrill of the hunt, the satisfaction of discovering a hidden gem, and the pride of seeing your collection grow and appreciate over time. To navigate this market, it can be helpful to work with experienced advisors or dealers who can guide you and help you avoid costly mistakes. There are also art investment funds that pool resources from multiple investors to acquire and manage a portfolio of artworks. These funds offer a way to participate in the art market without needing to own individual pieces or have expert knowledge. Art and collectibles can be a rewarding addition to a diversified investment portfolio. They offer the potential for high returns, and they can also serve as a hedge against inflation and economic downturns. But perhaps most importantly, investing in art and collectibles is a way to combine your passions with your financial goals. As we venture into this realm, let's remember that these are not just assets, but also pieces of history, expressions of creativity, and embodiments of human achievement. They offer a unique blend of aesthetic enjoyment, intellectual stimulation, and financial opportunity. Investing in art and collectibles combines passion with potential profit, but it requires a discerning eye and deep pockets. We've journeyed through a diverse landscape of alternative investments, each with its own unique set of rewards and risks. From real estate's tangible charm to the digital allure of cryptocurrencies, the investment world is indeed a vast and varied terrain. Let's do a quick recap. We started with the bricks and mortar of real estate, a sector that offers potential for both income and capital appreciation. We explored how one can leverage property rentals for steady income or delve into property flipping for a quick profit. But remember, it's all about location, location, location. Next, we ventured into the realm of private equity and venture capital. These are high-risk, high-reward investments that give you the chance to be part of a company's journey right from the start. The thrill of seeing a fledgling business grow into a successful corporation is unmatched, but it requires deep pockets, patience, and a knack for spotting potential. We then delved into the world of commodities and precious metals, traditionally seen as a hedge against inflation. Gold, silver, oil, or wheat. These tangible assets offer a real-world utility that can provide stability in times of financial turbulence. From there, we turned our gaze to the digital frontier of cryptocurrencies. a realm that offers a revolutionary approach to finance and transactions, but also comes with its own set of challenges, including regulatory uncertainty and potential volatility. Finally, we explored the world of art and collectibles, a niche market that combines passion with investment. Whether it's a Picasso masterpiece or a vintage comic book, these pieces offer both sentimental value and potential for substantial returns. Remember, the key to successful investing is diversification, due diligence, and a deep understanding of your risk tolerance. So explore beyond the familiar and embrace the opportunities that lie in the world of alternative investments.